All right. Good morning, traders. Happy Sunday, everybody. You should see my screen, hear my voice. You should be able to talk to me, talk to each other. Okay, let's see. Good morning, BitBoss and Kevin. Good to see you both. Good morning, Tony. Good morning, Jamie and Greg. Good morning to you guys. Good morning, Don. Thank you for letting me know. Good morning, Steve C. and Kent. Good Sunday to you. Thank you all for the well wishes and morning salutations. Good to see you all. Let me see here. I need to do one more thing and then we're going to start. I had to restart my. Okay, here's the question. Who has to restart their Thinkorswim every Sunday morning? Am I the only one that has to come in and log out and log in every Sunday? I'd rather leave it open. Don says yes. Okay, me and Don. Misery loves company. Good morning, Sandy. Good to see you. Good morning, Vladimir. Log out Saturday, restart Sunday. Okay, that makes sense. That makes sense. Good morning, Stephen D. All right, officially. Good morning, everyone. Welcome out to the Options Income Launchpad Sunday Market Insights. My name is Scott. I will be your host. I actually logged into the wrong son of a gun. Give me a second here. I wanted the live, not the paper. As always, what we do is for education and illustrative purposes only, nothing intended as a recommendation to buy or sell any security or financial product. We're not brokers or advisors. Therefore, we don't give anything that should be considered or construed as financial advice. Any decision you make should be done so at your own risk and discretion. Yada, yada, yada. Today, we will posture, we will review the economic calendar, we will do some sector identification for sector searching. Meaning, we're going to pick two sectors and we're going to search two sectors on Tuesday. I'm thinking we're going to search two sectors every Tuesday and Thursday. And we're always searching and we may if we do that, we're going to have times where we don't find anything. But there'll also be less instances where we're like, ooh, we could have found that if we were searching more frequently. I'm trying to find that balance. We do not want to be searchers, right? No one's like, oh, I decided I wanted to be a professional searcher. So, anyways, we're gonna do some watch list maintenance. We're going to create an early week opportunity list. I'm getting my note card out now and putting the date on. Today is what, August 9th? Wow. Crazy. 8, 9, 26. And this week's trading plan section of the week is always a good one. It is uh risk management. Risk management. Okay, section 4, risk management. That's the one we're going to be on. Perfect. All right, let's get cracking. My screen's not sharing? Oh, it's paused. Son of a gun. Sorry about that, you guys. Thank you, Don. And now you're seeing the uh, agenda that we were talking about and are about to do. All right, let's go. Let's go. Let me start here. On the 5-year chart, I mean 3-year chart. Hmm. And we'll get ourselves to the SPY. And we will have our market posture with eight. Let's see here. 8, 9. Perfect. And last but not least, we need the Oracle. I don't need jolts anymore. We need the Oracle. We need the Oracle on long-term analysis. Today, today is okay. Gotta move my microphone. You guys can still hear me okay? Yes? Let me know if the sound seems a little off. Okay, good. Perfect. Perfect, perfect. Today is 08/09/26. I am leaving my score the same. Remember that this red line is a 1.25. This blue line is a 1.5. That makes it as easy for me as it can possibly be. Steve C agrees, but Stephen D, I believe, is at a 1.5 with his angle. So, as is the Oracle. But this, with my lines in place, allows me to see. I need this to make its way all the way up to here. If over the next month we make another one of these, we'll get there, right? We'll get that. So great. That's when mine will rise. Otherwise, otherwise, I am going to leave mine at a 1.25. However, let me get a quick picture. We'll see if I can't imagine, based on the candle that we had, that the Oracle is going to do anything but leave it the same. I don't see that there's enough for an increase, that's for sure. Getting close, yeah. Good morning. Someone, sorry, your name came through, and I'm processing it. McData? Am I getting it right? I think it says McData Desktop. But good morning. Give me your preferred name so I can call you by what you want because I love knowing people's names. I usually am better at processing through the handle than that, but that's on me. But anyways, good morning and welcome to a new name, new face. Anyone else who's new and I missed you, say hello. Or if you're an old friend like Bob Roland who shows up sometimes, should just say hello, Scott, your old friend, something like that. I don't know. James. Oh, James, good. Thank you. Good to see you, James. Hey, my old friend Bob Roland, good to see you too. Good morning, El Jago. Love it. What an amazing crew we have. You guys are great. And as expected, the model stays at 1.5. Good enough. That's what we thought it would do. I could not see it doing anything else. Good, solid 1.5. We like to see the long-term trend acting as a foundational support mechanism for the overall market. That's always nice to have in place. Let's drop down to 6 months daily. Good pop this week, right? That's at least a quarter point. At least a quarter point. Don's at a 1.25. I get that. Interesting that he says that right as I say at least, because I'm at a 0.75, meaning I should go to a one, maybe a one and a quarter, right? Um, Don's a 1.25. Steven 0.75 adjusted. That's this week's score. Let's go back. One, two, three, four, five. So we were here. We were kind of stuck in this thing, and then boom, 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 we got this. Yeah, I'm gonna give it just a quarter of a point. I'm gonna give it a quarter of a point to acknowledge that they broke out and things are improving. It could. Steve C, I'm interested in yours because we've been pretty paralleled. 0.75 from a point 0.5. Fair enough. I respect. Yeah, that makes sense. I mean, it's hard to give it too much, right? We're not going to be like, oh, this is such an amazing breakout, unless you're the Oracle. So, good morning, Joey. Good to see you. Welcome, welcome. Yeah, I'm gonna go with the one. Let's go see what the Oracle's gonna. Oh, did I just close something? Shit, I think I did. Son of a gun. Oh no, I didn't. I minimized. Okay. Okay. Let's get a picture of this. And we'll drop that in. Steve D said, I compared my scores from back in April, May to see what I was scoring and match to what it is now. That's why I gave it a bump to 0.75. Fair enough. Oh, ooh, I don't know about a two. uh, oh boy. Indeed. It's okay. Just my early onset dementia kicking. God, I don't know. Sandy, is it early anymore at this age? Is it just standard? Um, yeah, I feel, oh, let's see. We were a two. We were a two back in May. Oh, that's us. Sorry, I didn't mean that. I want to look at the Oracle. Oracle has gotten to a two before. It stayed there for a while and then it eased off. Okay, Stephen D says the Oracle is in need of a new lesson. I'm gonna leave it. And the reason I'm going to is because this the strength of this right here, is pretty similar to like this right here. Coming out of, and if you fold this in with it, it's coming out of like a little bit of a consolidation, and this is coming out of a little bit of a consolidation. And we got a nice little bit of follow through when he bumped it to a two last time. When it bumped it to a two last time, we ended up getting a nice couple of rounds afterwards. So I'm not gonna, again, my thought process has been this. If it declares something erroneously, where it's like, well, this happened, and I'm like, what are you talking about? I don't see that. So let's go through it. SPY broke out of its multi-month consolidation decisively. Facts. That's true. Multi-month consolidation is here. We've been discussing this multi-month consolidation in our group. And we broke out with what? With a big old chunk of volume. That was pretty impressive. Okay, so that's so far true. Clearing the prior 760 high, establishing a new high near 777. Facts. Price is well above the rising 50 EMA. Boom. Turn back up. 50s rising. A clear sequence of higher highs and material improving short-term momentum. I'm not going to argue. It's more aggressive than we are, but is that possibly a lesson that we need as a group to say, hey, when we see strength, let's get into it harder, faster? Possibly, Stephen C. I agree. 100%. I agree. Maybe that's a lesson. We've got to be open to it. Um, Jamie asked, would the two gaps up last week have had something to do with the score? Let's go take a peek. I think gaps gaps are, I think, contributory. The gaps, I didn't give it volume. We know the volume, right? Gaps are strong. That's a good observation. A very good observation. So yeah, I'm as much as I'm like, let's go dial it in. I feel like, you know what? When we dial in, it's because it misstates something. It's like, oh, there was 7 volume days. And we're like, the hell are you talking about? There was like 3. It's pretty easy to empirically be like, that just didn't happen like you thought. But everything it said happened exactly as it said it happened, and it's valuating based on that. A valid, 100%, Steve. See, I agree. I'm gonna leave it alone, and I'm gonna be open to, like, you know what? That's the second time. And I might go back to some other times where there's breaks and be like, hey, did I miss? Do we need to go faster? Do I need to be like, oh, stop pussyfooting around with quarter points and knock it in there? It's going. Take it. I'm open to it. I'm open to it. Okay, so E is vaulting forward. Let's go see volume. I am pretty sure we're going to get some volume scoring going here because of that pocket of volume, right? We have a sell, and a sell. And I'll tell you what, this was the battle right here. This was the battle. Boom, boom. We had like this. I mean, look at that. That was one of the bigger volume days. And then the next day, the buyers are like, no. And then no. And then no. And then no. We have not seen 4 above average scorable buying days, possibly in this group. That was, this was something. The buyers came in, they smashed and grabbed, right? So let's recognize that. So now we have 3 sell days, 4 buy days, no ties. Definitely a 0.25. If I get one more buy day next week and that's it, and then we become a 350, that would actually take me to a 0.50. So we're close. This is where we are right now. Is like, closer to this than anything. And Sandy, good point. Good point. This is fresh enough that it will be scored for at least 1, 2, possibly 3 more weeks. This guy here is just sort of lingering by himself. Boom, 1 more week and he might be gone. 1, 2, 3, 4, 5. He'll be close enough to the edge that we drop him. So actually, if we end up at a 240 because we think that it has scooted close enough, that could also be a 0.5. So with no new sell days, there's a very good chance we move again next week. So yeah, those are as much as we look around at, like, Iran has not taken the deal there, and that is some news we need to talk about. Um, Israel's not agreeing to the deal. So Okay, let's get a picture of this. I am going to a 0.25. Boom. And the Oracle. Yeah, there's some exciting things there this week, even though there's some concerning things happening in the news. But again, the market seems to have adapted to the ongoing nature, at least for the time being, until we start to see inflationary data that really starts to get worse. This week strengthened the improvement we saw last week. I would move the volume score from a 0 to a 0.25. The important change is the composition. I count 6 above average days in the current window, 4 buyer days and 2 seller days. Actually, you're a little off, but I'm not going to go back and change it because of the third selling day that's back over here, right? Um, the institutional volume profile has shifted modestly in favor of buyers with 4 buyer controlled accumulation days. The relatively recent concentration of accumulation provides stronger evidence that institutional participation has moved from the previously mixed profile towards buying pressure. The advantage is meaningful, but not yet dominant enough to warrant a stronger bullish score. Agreed. Okay, now Don has a counterpoint from, it sounds like, his people. Volume remains neutral despite improving price action. The rally continues to broaden without evidence of significant selling, but the absence. See, I don't know. I feel like those are expansion days. Don, did you ask what its thought was of the 4 above? I mean, they weren't just above average; they were good above average. There are times where we're like, oh, it's our metric for anyone who's new or newish. It's 5%. We don't have a severely restrictive qualification criteria, right? Some people are like, well, for breakout volume, I need 150%. Okay, if you do that with the SPY, you'll rarely ever even get above average volume days. Some people go 20%. That might be a little better, but for a stock breakout, yes, 20% makes a lot of sense. For uh, oh, can you hear me now? I think I bumped my microphone. Sorry about that. This day here is about 40% above average. I'm gonna mark them because I do want to make sure we understand. That's 40. This one is 14 over 48. Uh, that's probably 25%. I'm doing this loosely in my head, so if anyone's like, "What are you talking about, buddy?" This one dropped a little bit more. Now we're down to about 10, 11 million. So that's probably about 20%. But then we got another jump, right? These are actually all very good above average volume days. And this one was another 20 million. So that's another 40%. Okay, Stephen, how close am I on my loose math, my mental math? Um, well, now here's the thing. The below average days. These last 3 days represent tops, gapped up, but came back down. So there was sellers coming in. So now when we say, wait a second, there's sellers coming in, and we come down here, then we say, did they come in with strength? And we're like, no. And then the next day it went a little bit lower. So we're like, now there's more sellers. And then we're saying to ourselves, they did even less. Then we had an slight uptick in volume, and it gave us this right here. So there you go. All right, good discussion. Good discussion. But for me, I'm giving this as pretty meaningful. I'm definitely grabbing that quarter of a point. Okay. Halfway through the analysis, and we're sitting strongly. I'm at 2.25. Oh, I need to give it the Oracle's 0.25. And he's a 3.75, 1.5 higher. More bullish, that's for sure. Okay. Questions, comments, concerns? Let's get to the second half. Let's get to the second half. Let me update this, make sure it's live all the way over. Nope, I don't want to click the ad, which I did accidentally. Apparently, Wells Fargo still pimping the World Cup a month after it ended. 0.25 for for me. Yeah. Sorry, Tony Z. Good call. Good call. I missed both of ours. Thank you for keeping me honest. Steve C. Same. Okay, here we go. Major market. Major market. Let's get to the major market analysis page. Let's get the right date. And let's get the first picture in. Okay. Whoops, that's not what I wanted to do. Small caps. Okay, so good news. The NASDAQ went from a lagging to it shot up. I mean, you can see it was a good 4% below the Dow and ended up 1% above. Not much of a lead, but it made a strong recovery move that we can see even on this first time frame, and we still have the Russell in the lead. We drop down to 133. We see that same thing. Russell in the lead and a big surge in improvement from the NASDAQ. Our concern with the NASDAQ had been that it dropped from a leading position to a lagging position over this few weeks of consolidative time. But on the breakout, it definitely made a strong resurgence, and that's of note. So that is that looks good too. Let's drop down to 6.6 as we do. Let me go remind myself of what my score was. I think I was at a 0. I was a 0 and it was a 0. Sorry, I keep doing that. Nope. I keep doing that, and I forgot to grab my 133 picture. Let me grab that real fast. Uh, Oops, controls. I don't know what's going on. I'm pretty sure I took the picture, but now I can't paste it. Let me try one more time. 133. Let's go drop this in. Okay, there we go. Down to 66. 66 doesn't look as good. That's where we still see the Dow in its defensiveness in a leading position. That's where, even with the recovery, the NASDAQ is still in a lagging position. So the foundation was okay. The foundation was okay. But now, uh, we're seeing that uh, the actual scoring. I agree with Stephen D. I didn't drop mine to that. That's where mine already was. Was at a 0 from last week, but I'm going to keep it at a 0 for this week based on this final um, conclusionary image. And I'm going to give this to the Oracle. Let's go take a peek. Ah, Stephen C was already there, still a zero. Yes, I increased mine to a 0.25. I didn't do it at first, but Tony reminded me to get it up there a quarter a tick. So, yes. And let's see. Let's drop down and take a look at the road ahead. This looks better. Well, there's less lead. I mean, these two guys are behind but catching up. I mean, look, you can see here just how quickly the Nasdaq is catching up. So another week could completely change the story, but we need to give it that week to happen. So in the meantime, we're going to go ahead and put this in and let the model score it. Ooh, okay. So it's scoring the improvement. It's scoring the improvement. I'm waiting to actually see the lead in place. I'm not going to argue. Nothing that said was wrong. All those things happened. I'm finding that the Oracle is more bullish than me on a steady state basis. It just has a tendency to be more aggressively bullish and to just sort of have a more of a bullish orientation. I don't know. I'll be honest. The last time when it got bullish quickly, it paid off. It worked out. So I am open to it. Like, hey, maybe it's picking up on something that I'm a little bit more reluctant to see, or possibly I don't know. I don't know. That's the whole point of having an objective AI tool, is not for us to confirm our existing um, evaluations. That would just be confirming a bias, right? This is all about introducing something that gets us to say, well, okay, do we need to be um, reread the Oracle comments about the strength? Sure, I'm open to it. All four indexes rebounded, which when you look at think about what leads this analysis for us. The NASDAQ, that's the leader. In this analysis, that's the thing that we tend to anchor to first, followed by the Russell, and that's where we saw the recovery. Big surge up, right? Um, Importantly, I didn't get down that far yet, Stephen D. Good eye. Okay, so now look, again, he's not scoring that they're leading, not he, it's scoring the recovery. You'll notice that this is still in the lead, but so barely, right? Versus like it's only from this point, everybody else has done better. I'm gonna leave it. I'm gonna leave it. Give me your thoughts about that. I think Stephen D is leaning towards leaving it, or having a conversation, but I'm not. I'm gonna let it go a little while longer because I just don't. I think it's right. This week's rebound broadened with strength no longer concentrated. Russell maintaining the Dow's short-term leadership keeps this from becoming stronger, but the breadth improvement. Okay, fair enough. So okay, here we go. Let's move on to the sectors. I'm still a zero. Oh, he was already at 0.25. Or did I change it to a 0.25? Maybe I changed it then. Um, but I'm a zero and it's a 0.25. I know that. I changed it. Okay. Thank you, Don. Let's go do the sectors. Let's get a refresh. Okay. And today is 08, 09, 26. Okay, there's a 1. Let's go back over. What is it telling us? Energy stable from last week, maybe even coming down. Technology, a huge spike from last time, reigniting it in its leadership position, at least from this time frame. We see industrials and materials. Healthcare's creeping around. Financials hanging out. Staples. It's kind of like a bunch of mixed bags. It's like you've got utilities here with discretionary. You've got financials and staples. So it's kind of an interesting thing. With technology leading, it at least can pull out a 0.25. Let's go to 133. A mixed bag of mixed candy, indeed. Indeed. Okay. Let's put that into the markets or into the Oracle's soup pot. Let it stir it up and see what it tastes like. What do we think? There's that renewal of technology into the leading position. This is probably the main factor that was putting pressure on, was seeing this come down, but this is we'd love to see some increased breadth, which would mean additional sector participation from, financials and or industrials or something. Would I say this is the start of something? I mean, it feels like enough of a breakout move that I would say more yes than not for sure. I don't love the news. We'll go look at the news, but the market's been able to shrug it off pretty easily these days. Did I drop that second picture in? I sure did. So what do we have? We do have industrials. Energy's kind of stalled. We know why it's there. And then we have industrials and technology above. With financials close. It's getting better. Discretionary is nowhere near. Neither is com services, but at least a couple of them are vying for position. Okay, we've got healthcare in the lead. Odd. We've got financials in the mix. We've got technology in the mix. We've got industrials slightly above the fold, right? If the S&P is the fold and down here is everybody else, we know that comm services is struggling. We know that discretionary's improved. When we go to the 22 day, you'll see that more because of Amazon earnings, but not yet. Not on this time frame. Let's get a picture of this and drop it in. I got to tell you guys, I'm leaning to a point 0.5. Anybody else? Let's discuss why, because we're on the scoring time frame. I've got healthcare that is had a surge, and if it's utilities, staples, and healthcare lead in a lead, then I'm going to add healthcare as a defensive group. But if healthcare is the only of those three in a leading position, then I'm not going to be like, oh, it's look at the defensive surge in healthcare. I'm actually going to either neutralize it or even. So there was a market. I mean, this is a while back. This is like in Obama years after the pass of the Obamacare, the shifts in healthcare around what happened with that. There was like a year period in a bullish market where the leading sector was healthcare. Never had seen that before. Where you're like, whoa. Used to always see healthcare as more of a defensive, but it's a bit quasi. And for me right now, I'm actually going to neutralize this. No, I'm not going to necessarily say it's growth, but I'm going to say it's neutral, which means then I have growth for technology, growth for financials, and growth for industrials. Even though it's barely, that's enough for me. I'm going point 0.5. I'm going point 0.5. Oh, that's nice. That was nice. Let's go to the 22 day and then we'll let the Oracle score and see if it agrees. Let me go back. I just make sure that I was all the way over. I was. Okay. Make sure you're all the way over. What do we got here? We've got energy and materials and financials. So financials we said doing better. What else do we have? Down here is utilities. Technology's trying. Yeah, I don't know. On the 22 day, you're really not getting a good read. It's a little bit of a mess. It's a little bit of a mess. So I'm not really getting much out of that, to be fair. Stephen D says needs a little bit more before raising his score. Okay, that's fair. That's fair. Let's go run this real fast. While that's running, let's go take a quick peek at the economic calendar. Let me refresh this since we're here. Nothing tomorrow. It's inflation this week. That's the theme. Inflation. Nothing on Monday. Tuesday, what do we have? Nothing really. Optimism index, nobody cares. Existing home sales, nobody cares, although it's still down. Pre-pandemic, this would be close to like 6 million. So it's definitely a less fluid um, housing market overall. Federal Reserve Bank of New York, debt and credit, nobody cares. Wednesday, CPI. We're expecting it to tick up, but the fact that we had a below expectations jobs report brings balance to Fed pressures. Inflation's up a little bit. They're thinking maybe we need to raise rates. Jobs are down a little bit. They're thinking maybe we should leave them the same for now. So I think that's where we are. Thursday is PPI and jobless claims. PPI, it's only giving us one number, but that's also looking for an uptick. It's not giving us the year over year, so we can't see that. And then Friday we have retail sales and a consumer survey. So there we go. With a pretty decent week of information coming out. The Fed watch, we won't go through it all the way, but it's leaning towards at least one, possibly two hikes this year, if anything. So if any actions are taken by the Fed as of right now, more up possibility than down. And as I said, as you watch the new guy coming in, there were some people who are like, "Oh, he's going to come in and immediately cut the rates," and you're like, "He's not. He can't He won't. Um, it's a committee, right? So he doesn't have the authority to come in and do that. But, anyways, okay. Let's go see what the Oracle says. Hold. Sector rotation remains mixed, but has improved beneath the surface with technology rebounding sharply. Industrials, healthcare, financials continue to show meaningful relative strength. See, it says the 22-day is broadened. I disagree. I don't see much in there. Holding at zero. Like Stephen D, the Oracle is waiting for another week before giving it the 0.25. Fair? That's fair. So let's see. You're a zero. Wait, you're a zero and I'm a 0.5? Ooh, well, that's interesting. I'm the most bullish on sector rotation, huh? We'll see how that plays out. Where's everybody else on sector? Is anyone at a 0.25? Is everyone else at a zero like the Oracle? 0.25 for Steve C. Is anybody at a 0.5 or is it only me? My old friend Bob Roland and I ride together. That makes perfect sense. Okay, let's go talk about the VIX. Um, that's an interesting one. We haven't seen such spirited discussions with that much of a range on a one pointer for a little while. So that'll be a good one to watch and see what happens next. I like that. Let's go. Today is 08, 09, 26. Let's pop in here to the VIX. Let's open it back up to 6 months, our preferred time frame. I'm gonna leave it. The VIX is too low, John says. There are so what is happening? I think I moved my mic and I'm bumping the top of it again. I had it covered for a while. Okay, there we go. That's better. Okay. This period down here, that's low. So if I were to adhere to the saying, now, if you know that that's the highest point and it's going to come down, that's a great time to buy. For sure. But that doesn't make so let's go put SPY in here. You can see what I mean when I say like when the VIX is low, it's time to go. This was the best time on the whole map right here. Right? But yes, if you could go to yourself and say, you know what? That's the highest VIX. I'm going to go ahead and buy there. I mean, nobody's going to do that. That's just silly. It's kind of a silly like, oh, here's what we should do. No, we're going to analyze it and we're going to basically say when the VIX is low and breaks, now it's time to go. That's why we wait for the breakouts. We wait for the higher lows. We wait for the signs of escalation. If it's low and then escalates, That's when it's time to go. If it's high and it breaks down, then it's time to buy. We can't just be like, oh, because it can live in 12 for, I mean, ideally, if I could script what I want to see, I want to see it fluctuate between 12 and 16 and spike to 20. If that's the environment, I'm going to be super happy. I'm going to be super profitable and super bullish. And that's a low VIX. That's my that's my stance. So it's not about the location, it's about the expansion. Is it escalating up? Get the hell out. Is it breaking down? Then that's the institutions becoming unencumbered. Breaking down means they're shutting down their hedges, unencumbering. Now, as they unencumber, they can go buy. Institutions will not work against themselves. They will not buy stock and buy hedges at the same time. That we know. If they're hedging, they're not buying, they're rearranging. I mean, they may have some buy activity, but they're not net buyers. They're changing and shifting during high VIX, right? When they're unencumbered because they're not hedging, yeah, they're net buyers. It's that simple. That's the flow. So, anyways, yeah, great discussion. Oof. Although I took a little time on it. Let's get back to the VIX and get a picture of it. I'm not gonna raise mine though, I don't think, because I'm already at a 1.25. Okay, let's go. Let's get him scoring it scoring it. Let's get back. I'm at a 1.25. I just don't know. Maybe it is. Maybe it is good enough to go to 1.5. But I want you to notice that we broke to the lowest low on this chart. And for a minute on this day right here, we were a little bit like, oh, this thing, if this thing starts to go the other way, we might be in some trouble. I don't know. I don't know if it's a 1.5 though. I'm gonna put it. I'm gonna put it. Wait, you're a one? Let me see. Does that make sense? Hold at a one. I'm on the fence with this one here. I'm leaning towards an extra quarter of a point. Maybe I'm gonna keep it one more time. I'm gonna keep it one more time. If it breaks down toward the 13s, that'll be where I go to 1.5. If this week we get into the 13s on a lower low, then I'm gonna go 1.5. Um, Thoughts on that? Anybody else want to weigh in? Steve Cease with me. The Oracle kept its score the same as a one, and there we go. That's a good week. Up 3/4 of a point from 3.5 to 4.25. The Oracle went from a 4 to a 5, led by its half of a point short-term score increase. We are a 4.25. It is a 5 average there. What is that? 4.66, whatever. Sandy's a 4.5. Anybody higher than the Oracle? Anybody lower than me at a 4.25? Steve C's a 4.25. I like to get like a range for the group. We feel like we're probably in like I would say 4.5 feels like the average score right now. So amazing how we could be so different on the individual evaluations. Let's yet stay within a point 0.5 score. I mean, I feel like it does sort of keep it grounded. I mean, right? I agree. Bob Roland 475. Yeah, I feel like 4-5 is pretty indicative of the group of 4-5. What do we consider 4-5? A good, solid, getting bullish. It's not bullish. I want to bullish is like 5. Very bullish is 6, getting into 7. You know, kind of bullish starts at a 3. So we're in a good spot. 4-2-5. The Oracle's moving into a more solidly bullish territory than I. I'm still a little bit less risk on, but overall, good conditions. I like it. 4-2-5. Yeah, John, you mean Steve. The low 4-2, the 4-2-5 makes sense, I think. Okay, let's go build our watch list for this week. Huge, huge. Uh, sorry, where is it? This is a big one this week for the trading plan for everyone who's working on that. This is a big one. We're working on risk management, portfolio heat. What is your total risk? Trade risk. How much risk per trade? Number of trades. How many concurrent open trades are you willing to have at any given time? When will you make adjustments and to what? Do you adjust the number of trades first or the risk per trade first? Some people would prefer to always have 5 or 6 trades but go from 1.25 to 1% to a point, right? And some people prefer to take 5 or 6 down to 2 or 3. Okay. And that will adapt your portfolio heat. How are you correlating this to what we just did? Like when you hear us say a risk on environment, risk on, talking about risk management. So how much risk? Tsunami indicators for hedging. You know that I tend to use the VIX and look for escalations as being indications that the institutions are indeed increasing their hedge activity, which then makes me want to increase my hedge activity. Lastly, in your risk management, and this is one that I find lacking in almost every trading plan I've ever seen. When do you stop? Give yourself some guide rails where you say, you know what? I can't just keep smashing my head into the wall if things aren't going well. What's going to cause me to stop? Now, I've thought of 3. There's probably way more than this, and everybody can find theirs. But if I draw down a certain amount, 10%, 12%, 15%, right? Keep it pretty. If you lose 10, you have to make 11 to get it back. If you lose 20, you have to make 25 to get it back. If you lose 50, you have to make 100 to get it back. You see what happens? You see the risk of drawdown. The bigger the drawdown, the harder the recovery. Therefore, don't lose money. I feel like I've said that before. I don't know if you guys have listened or not, but don't lose money. At least not too much at any given time. Just to get back to zero, right? Think about it. If I have 20 grand and I lose 50%, I'm at 10 grand. Well, at 10 grand to get back to 20, I've got to double 10. I've got to make 100% to get back. That's the point, right? It's you put yourself into untenable circumstances if you 25, right? Or excuse me, 20%. If I have 10 grand and I lose 20%, I'm at 8. At 8, I've got to make 25 to get back to 10. That's the limiter. Easier said than done indeed. That's why I laughed. Okay. Drawdown, number of losing trades in a row. Don't do something silly but like if I have 3 losing trades in a row, I've seen people do that. I'm like, 3? God, that's a normal week. What do you mean? Give yourself some leeway. This is mine that I tend to hit the worst, the flow. When I'm like feeling frustration, when I'm feeling antsy, when I'm like right? I'm on tilt is in poker is what they call it. So I hope you can imagine what that means. But I'm not trading the way, and I'm gonna. And it's a funny thing. If you looked at the last maybe 3 or 4 times I've done it, always around the holidays for whatever reason. I don't know why. But I'll be like, I'm gonna take a week off. And inevitably, by the third or fourth day, some trade comes across, and I'm like, you know what? I'm gonna go ahead and take that trade, and I usually am fine with that, right? I don't like force myself to take the full week or whatever. Anyways, okay, let's get that worked on. I'm gonna fly through today's list. I know I'm at time. Thank you everyone for the extra time. If you have to leave, I will post this obviously, but let's go through and see what we like. Starting with AAL, which is flagging. Yes. Apple, no. Archer Daniels, no. I love that, Sandy. Sandy said, I stop when I'm tempted to take too much risk fueled by desperation. Love that. Love that. AMAT, no, and earnings are coming up. Amazon, yes. Amazon is showing us some strength. ASX is on our list, and it's one that we have decided we like out of that chip sector more from a breakout, sitting at that 50. BAC is a yes. Financials staying strong. I'm going to hold off on BNS. I'm going to put Citi back on the group. CrowdStrike is on the list, but needs a pullback, right? We need a flag. Don't, you know. Cisco, I'm going to hold off because of earnings this week. I might have put it on. It did break out, but I'm going to hold off on that one. CSX is a yes for me still, even though it had a little hiccup. Hiccup. CTAS looks good. Delta looks good. The diamonds, yes. Elf Cosmetics. I would trade that on a pullback. GE, yes. Industrials. Gold. Ooh, gold is actually, let's put precious metals in there, right? There's a little bit of a breakout there. General Motors still looks pretty bullish. There's some good things out here in our list. Google looks good. Oh, Google. You guys know how much I love to trade Google, and I'm looking for a trade on Google. I want it. I'm going to hold off on GS still. I like HPQ, but it hasn't given us anything to latch onto, but maybe it will. IWM. Johnson and Johnson is a solid possibility still. Um, it just didn't quite. I mean, I guess I could have maybe taken it. It was right near the level. I think I was looking for a little higher. Thank you, Stephen D. Have a great rest of your day. We'll see you tomorrow. The rest of this list will be posted soon. KMB, no. Lion, no. LRCX, no. Lunar. Lunar on a. I'm gonna put Lunar on my list, even though it has earnings. No, I'm gonna wait because of earnings. Lunar's looking pretty good. We know it can move. Met, still a yes on this pullback for sure. Meta, no. Monster, no. Marvell, no. Morgan Stanley, yes. I'll put Morgan on. I like financials coming in. Microsoft, yes, on a pullback. Solid list. Micron, no. Netflix, yes. I'm looking for a sneaky reversal on Netflix. Thank you, James and LJ Go. See you guys. Nokia, not quite. Actually, I'm going to put Nokia as a maybe for a sneaky reversal. Nvidia, yes. Oracle, yes. Ooh. The only good news is it's taking longer because we're getting some good stuff on the lists. Palantir, I'm going to wait to see how this thing plays out. Q's, Rocket Lab. Rocket Lab's looking good. I'm going to put Rocket Lab on. I'm going to put Lunar and Rocket Lab on. I'm not putting SpaceX. I want to see more of their options still. Ross Stores, no. RTX. Yeah, I'll put RTX on. Silver. Yeah, I think we could look at silver as well if you like one better than the other. No, no for me. Thanks, Jamie. Good to see you guys. Those who are sticking around. Target, no. T Row, no. Tesla, no. Taiwan, no. Unilever. I'm still gonna put Unilever on. I like it still. UPS, no. Viking, yes. Oh, Viking looks good. I'm looking for another one out of Viking. WDC, no. Walmart, no. That's our list. Boom. Okay, we've got about 25 or so on there. We're working on section 4 for risk management. We will meet tomorrow to shift our market posture that improved into our trading posture. We're looking for some good things. Thank you, everybody, for coming out and hanging out with me. Great discussion today. Really liked it. Like to see the market conditions improving, even though there's some uncertainty in the geopolitical sphere. Hopefully, those things get worked out. Thanks, all. Enjoy the rest of your day. See you tomorrow. Happy trading.